our first speaker is Leanne Arundell from Castle Trust Bank. And there's a picture of Leanne, and there's her in real life. With Leanne, you might need to pull your blinds because because you're a bit of a silhouette with the blinds.
Just see if that
That's
makes.
better,
Does that
actually.
make it better? Yeah. Okay.
That's better. Right. So I'll rush through this because we have lost some time today, unfortunately, because of our techie problems. And by the way, my apologies if any of you heard me swear when the thing first went down. But yeah, that was a reaction to IT problems, as you can imagine. Now, those of you that received the email from me this morning, you received this from me, which is Castle Trust Product Guide. It was issued in November 2021. A little bit on Leanne. Leanne's Business Development Manager for Castle Trust Bank, covering North London and Midlands. She's been with Castle Trust for 7 months, and prior to that, she has 23 years' experience in financial services, with roles ranging from managing a team of underwriters, coaching and training. For the last 6 years, Leanne has been a business development manager for various lenders. Away from work, Leanne spends time with her family and is kept busy by her 2-year-old daughter, Daisy Grace. And her interesting fact, if it decides to appear, Leanne plays piano and once wrote a musical score for the college presentation of The Tempest. So there you go. I must admit, we have a very talented bunch of presenters today, so it puts me to shame. So all I can do is cook a bit. Whereas we've got also you'll see it as those come up. So there's Leanne's. She plays piano and writes musical scores. So which is far better than anything I can do. So Leanne, it's over to you. I'm going to go and have a lie down, and I will see you in about 20 minutes.
Perfect. Thank you very much, Tony. Morning all. Thank you for your time today. So my name is Leanne. I'm the Business Development Manager for Castle Trust. And as a lender, Castle Trust is known as a buy-to-let specialist. So moving on to the first slide, hopefully if that works for me. By the end of today's session, hopefully we'll create an understanding of where Castle Trust now sits in the marketplace. We've made significant changes over the last 2 years where we have converted now to a bank. We've moved away from the second charge arena, but it's very much the buy-to-let specialist market that we're now in. So what I'm going to run through is what we can and what we can't offer. I'm going to highlight some key hotspots of our proposition, and hopefully it will demonstrate a few different options for you and your clients, depending on their circumstances and what they're looking to do. And then Castle Trust will hopefully be in your mind as an option for your clients. We'll also run through a few of the recent changes to policy, along with some of our current semi-exclusive products. So as a lender, what do we lend on? So we do standard buy-to-lets. We do a bridge-to-let offering, which gives a guaranteed term option, which I'll run through in a bit more detail further on. We have holiday lets, where we do assess on holiday let income. So again, we'll be covering that off in a bit more information further down the line. We have development exits. We deal with multi-unit freehold blocks, HMOs, including conversions to HMOs, and we also have large portfolios. So the key points on our criteria, we have a suite of products that are available to all types of customers. So in all of the areas that we cover off within our policy, we have a suite of products that fits all. So it's not specific products for holiday let or HMO or anything like that. It is just one suite of products across the board. We do lend to first-time buyers and first-time landlords. And the one stipulation that we have in place for that is that they do need to be in an SPV, but that can be a newly set up SPV. We will lend to foreign nationals and expats. So from that side of things, it is dependent on their place of residency and nationality, but it's always worth a conversation to see if that's something that we can fit in. What we tend to say is that for people that are UK, EU, EEA based or national, then we can look at those cases with a minimum loan of 100,000. Anything where it's outside of those areas, they do need to have a UK mortgage footprint. And we do have a minimum loan of 500,000 on those. However, we can work it so that if they have multiple properties that they're wanting to refinance, we can put that under one loan so that it does fit that requirement. So as I said, it's always worth a conversation around those types of customers to see how we can help them and assist with any refinancing for them. We do only lend on investment properties, so it's your residential investment properties. We don't do any commercial or semi-commercial lending. And we only lend in England and Wales. At present, we're not lending in Scotland. However, who knows if that will come in the future. We offer dual rep legals up to a loan of 2 million, and we are also looking at bringing in title insurance, which will speed up the process for all customers moving forward. On the multi-unit freehold blocks, we will look at unit sizes of 30 square metres minimum per property, with an average of 35 square metres across all of the units. Now, again, what I would say is it's always worth that conversation. If there is one or two of the units that are slightly under, we may still consider it. We're very much a lender that is asset driven. So it's looking at these side of the asset, the customer profile, seeing what we can do and how we can assist. We're quite a flexible lender. We have credit committees 4 times a week where we can sit in front of head of credit, head of underwriting and the directors, and we can present an application where it is a little bit quirky and slightly outside of policy. And by putting those points across, we can then see whether it's something that we can agree for you. That's all done pre-dip stage. So by the time you've got an agreement at that point, it's a fairly quick agreement that can come through. And that's then given subject to your credit check and valuation report. So you've kind of got a yes before you start doing your decision in principle and paying your fees. However, if it is something that we can't assist with, it's also a quick no. So you're not going through a process of submitting an application through and then 6 weeks down the line finding out that actually it's not something we want to lend on. So it's quite a handy tool that we can have with those credit committee meetings. They are 4 times a week, so we can get an answer to you usually within 48 hours maximum as to whether that's something that we can look to do for you. We will look at limited adverse credit. It is something that, again, case by case, it would depend on the circumstances and what level of adverse they've got. And we do have individual underwriting on all of our cases. So from that point of view, it makes it quite unique, I would say, from a flexibility point, because we can look at the cases on a case by case basis and do the individual underwriting where required. So the first area that I want to cover off from our product aspect is the bridge to term. So I think we know that the key to any bridge is the exit. So we actually give a pre-agreed term loan exit on our 10-year term, which has an offering of a 2 or a 5-year fixed rate period. Now, with that pre-agreed term, it's guaranteed that they can move on to that term. However, if the customer decides that they want to exit elsewhere, then they can absolutely do that. They're not tied into moving on to the term with ourselves. We will look at loans from 100,000 up to 2 million, with a maximum asset value of 4 million. We will go up to 80% gross day one if it's a refurbishment on the property. If there is no works being done and it's just a purchase, then we'll go up to 75% LTV at day one. And what they can do is they will go into a bridge rate, which is a 0.67% rolled up interest. As I said, they're not tied onto the exit, onto the term loan, but they have the option to have that guarantee there to move on to it if they want to. And we can also uplift the term loan based on the improved value of the post works. So we've got a few examples, hopefully further down the slides, that will kind of bring that into practice for you. And we allow the refurbishment within this bridge to term product within permitted developments. So that does include your HMO conversions. So effectively, if there's works that are under permitted development, they're looking to move from a residential to a HMO, they're doing some conversions, some decoration works, what they can do is they can put that on the bridge product, they'll have the bridge for up to 9 months, they can then exit onto the term and they can actually increase the borrowing up to 75% of the increased property value, which gives them the option to draw some further funds out of that property and put into their next project. So how this works is with the bridge to term, as I said, it's a rolled up interest from 0.67%. They're tied in for the first 3 months, but then from month 4 to month 9, they can actually exit from that bridge with no ERCs. Now, what that means is that the customer, if they get their works done by month 4, they can either exit onto the term plan at that point, they can exit and go to another lender at that point, and there's no ERCs. Alternatively, they do have the option where they can actually stay on that bridge. So if they have completed the works but want to give themselves time to be able to get tenants into the property and start bringing some money, generating a bit more money back into the property, they can still remain on that bridge until month 9, when it would then move over onto a serviced loan. But still in that serviced loan period, they get 3 months where they're in the serviced period, but again, there's still no ERCs. So actually they can exit from month 4 to month 12 with no ERCs from our bridge product. Just to put this into a little bit of practice and context for you, so around our policy offering of holiday lets. So with the holiday let market, we have seen a boom in inquiries. I think the last kind of couple of years have seen that people are starting to holiday at home and realising the earning potential and the yields that they can get from that. So when we're assessing a holiday let property, we will assess it based on the actual holiday let income and not an AST income. So we will get evidence to holiday letting agents letters from kind of your Sykes and your cottages. They would confirm the holiday let income for low, medium and high season, and we would take an average of that and use that figure. We will do holiday lets through limited companies or in personal name, and we do also cover it for your first time buyer, first time landlord as well. We'll do the holiday lets within the term offerings that we've got, which I'll run through those products in a second, but we can also give them the option to do that bridge to term option as well. So they can buy the property, start getting clients in, maybe do a little bit of work on the property to make it a bit more marketable as a holiday let, and then they can move on to that term product as well. So there's a couple of different options there for them. I think the biggest thing for ourselves around the holiday let piece is the asset. So would you go on holiday there? We do typically look for your holiday type areas, but that can be coastal, it can be the countryside kind of retreats, the Yorkshire Dales, Lake District, etc. But we will look at each case on its own basis. So if there is a market for holidays in that area, or for people using it on an Airbnb basis, we will consider those options as well. So again, that key thing, I can't get it across enough, is it's always worth that conversation and the referral across to Specialist Hub for them to speak to us and to see whether it's something that we can do for you and how we can move it forward for you as well. So a case study on a holiday let example. So this particular scenario, it was an applicant who was applying as a limited company. They were buying a 6-bedroomed house on the seafront, so it was ideal for a holiday let option. They bought the property for 500,000, but it did need a little bit of work just to make it so it was a bit more marketable and presentable as a holiday let. The customer was looking at their clientele they were trying to get into the property, so it's now starting to see whether they need kind of your hot tubs and what kind of market you're trying to achieve from this property. We lent them a loan of £375,000, which was 75% gross day one on the bridging loan. So they had the 0.67% rolled up interest basis. They had up to 9 months to complete the refit, set up the management and to build up those bookings within the property. Once the refit had completed, we switched them to a 75% LTV on our semi-exclusive product, which is a rate of 4.5%, 5-year fixed with just 2-year ERCs. Now that product really gives that product the flexibility around having the 5-year guarantee fixed rate. You're getting the stress test done on the 5-year rate. However, they can actually exit after 2 years with no ERCs if their circumstances change or they wanted to do something different. Now, with this particular project, the customer did the works and the property then increased in value up to £625,000. That meant that they could then capital raise almost all of the funds that they'd spent on the refit for the next project. So we increased their loan at term point to £468,750. And there was an expected yield on the investment of 9 to 10%. So it was a good property, a good deal for ourselves to do. And it gave the customer the option to do those works and then draw more funds out to be able to move on to the next project for them. Another example of a holiday let scenario that we've looked at, this one was a property that was a top floor flat in Canterbury High Street, and it was above a Prezzo restaurant. Now, usually you would think that something above that kind of commercial element and in a high street may not be something for us to look at. However, what they were looking to do is they wanted to capital raise to purchase another buy-to-let property locally. Obviously, it was a remortgage, so they'd got the bookings already in the property and they'd had the experience. The broker who was looking at the case gave them a couple of options. So they went to one lender who said that, yes, they would look at this property, but they would do it on an AST rental basis. And because of the ICR calculation, that capped the LTV at 64%. Lender 2 looked at it and said they would do it, but they would also assess it on a holiday let income. So it gave them a little bit more possibility from that side of it. But because of the asset and where it was based, they'd capped it at 60% LTV. The case then came across to ourselves. We reviewed the asset, we looked at the area and obviously the market that was out there. The fact that this was a Prezzo restaurant, it's 2 stories above the restaurant, it had a separate entrance and was on separate title. The restaurant closed at 10 o'clock in the evening, so it wasn't anything that was going to cause major disruption to someone who was staying there. And for short-term lets, actually, it was an ideal location for them. So on that basis, we were happy to lend to them, and we actually lent the full 75% LTV based on the holiday let income. So it just shows the options that are available to someone and how we can look at the actual asset itself. And if we think that it does fit and it makes sense, we will certainly look to do what we can for the customers. Moving on to our multi-unit freehold blocks, this is another area where we're starting to see an increased inquiries. I think where people are looking to move into this space from a yield point of view, but also from a development exit aspect where customers have completed the development finance and they're needing to buy themselves a bit more time to decide whether they're wanting to sell the properties, if they're going to keep them, whether they're going to sell some of them, and it gives them the opportunity to be able to market those properties. So this is where we can assist the customers by putting them potentially on that bridge product to buy them a bit of time to be able to sell some of those units that they're looking to sell. We have completed on various multi-unit freehold blocks, ranging from 4 units up to 67 units. Again, we will look at first-time landlords and investors in this space, your limited companies, your personal names, and again, we will look at foreign nationals and expats as long as they meet the normal requirements. Unit size, as I mentioned previously, so it's a minimum of 30 square metres with an average overall of 35 square metres. However, again, it is very much that piece of looking at the property itself and the asset and whether we would assess it based on an aggregate value or a block value can determine whether we will consider them where they're slightly under the 30 square metres. It is very much case by case, but we are open to looking at options and if it's the right asset for us and the right customer profile, we can look to do that. We will offer bespoke valuations, we have a bespoke transaction structure, and we have the set pricing. It does say bespoke pricing there. It is very much dependent on what they're doing, so whether it's development exit or just a purchase of a multi-unit freehold block. And we will go up to a maximum of 15 million on those types of units. So some recent policy changes that we have brought in. So we will now accept the first-time buyer, first-time landlord. So from around that piece, that came in around December time. And we have said that they do need to be in a limited company or an SPV. And they do need to be UK, EU, EEA national and resident for that. But what we're looking at there is the plausibility is the key, but that's not plausibility around affordability. What we're looking at there is it plausible that they are actually going to rent that property out? So we're making sure that it's not a customer who is kind of earning £23,000 buying a £750,000 property down the road that they're essentially going to move into. But certainly we are in that arena for the first time buyer, first time landlord. We're open for business and please do get in touch with us if you have any of those types of inquiries. From a valuation point of view, we will use open market value up to 1.5 million outside of the M25 and open market value up to 3 million inside the M25. Any loan that is above £1 million is reviewed in the credit committee large loans meeting, and that is where we can have that full conversation to see how we want to proceed, what valuation basis we'll use, what rates we can offer you, and we'll try and get the best deal that we can for you to help you get that customer on board. And it's that quick kind of conversation where we can get response to within 48 hours as to a definitive answer as whether we can proceed or not. So running through our products, we currently have some semi-exclusive products that we have up, which is 3 different products. Now, these are up to 70% LTV for the first product, which is coming in at 3.95. So that's on that good opportunity of doing the 5-year fix with the 2-year ERC. So it does give that flexibility around that product. We then have the same product again, but up to 75% LTV, which is at 4.5%. And finally, we have an offering of a 4.15% for 5-year fixed with a 5-year tie-in. And again, that's up to 75% LTV. Now, these semi-exclusive products are currently available. We are on a rate watch at the moment. So if there is anything where you think it would fit with us and you're wanting to kind of secure that rate, it is something that we kind of need to act fairly quickly with as the products will be being pulled, we suspect, in the next week or 2. As soon as there are new products available, we'll be launching those with Specialist and we will pass those details across for consideration. We do also have standard rates. They start from 3.82% on a 2-year fixed, and they go up to kind of 4.34% on the 2-year. And from a 5-year point of view, it starts at 4.22. So the exclusive products really are a good offering for us at the minute. And on top of those exclusive rates, we do have a valuation incentive. So for any cases, that's now actually changed from the 29th of April to the end of May. So any cases that complete before the end of May at the minute will get the valuation refund up to £5,000 plus VAT. Now, I think the key thing to remember there is that we do lend to portfolio landlords and we have no cap on the number of properties in the portfolio. So when you're starting to see your larger cases and the larger number of properties, that can really work well for them. If they can secure that 3.95 rate plus a £5,000 potential refund of the valuation, it can work quite well for the customer moving forward. As I mentioned previously, all of the products are available to all types of borrowers and transactions. So it doesn't matter whether it's a multi-unit freehold block, whether it's a first-time buyer, first-time landlord, or a holiday let. These products are available across the board. So it's not specific to case types. It is available across the board. So pretty much that is everything covered from my point of view. Hopefully from today's session, you will take away that as Castle Trust, if you've got holiday lets, multi-unit freehold blocks, bridges where you're wanting to do refurbishments or conversion of HMOs, first-time buyers and first-time landlords, and your expat side of things, all of these, anything buy-to-let, please think Castle Trust.
Leanne, thank you very much indeed. That's your first presentation with us, I believe, isn't it?
It was indeed, yes.
It is. Well done. Very, very
Thank you.
good. Okay, we've got any questions you'd like to ask, then please just type them in the box. Just in case we don't have any questions asked, we always ask the presenter to set themselves some questions. So hopefully you'd expect the presenters to know the answers. So here's the big test. So Leanne, on multi-unit freehold blocks, do you use block value or aggregate value?
So for multi-unit freehold blocks under 20 units, we'd use the aggregate market value. If the valuer confirms they can all be sold within a 12-month period. So I guess how that can make a difference is that we've currently got a case in where it has a block value valued at 4.75 million. However, assessing it on an aggregate value, it's actually valued at 5.56 million. So buyers using the aggregate market value, we can potentially actually lend more money than someone who assesses it on a block value.
Okay, and the questions are now coming thick and fast. Is there a minimum loan for holiday lets? That's from Mark.
So not specifically for holiday lets, it is just minimum loan across the board. So the minimum loan we apply is 100,000. For the exclusive products, it is 150,000.
Okay, back to your questions. Castle Trust started to lend on foreign nationals, expats, where they were first-time buyers, first-time landlords. Are you still in that market? I think you might have answered that. So,
yeah, so we are still in the market, but it was so successful as the first-time buyer, first-time landlord in that arena. It affected and increased our risk weighting. So what it means is that our requirements have changed slightly in that forum. So as I mentioned in the presentation, anything that is outside of the EU and the EEA, we do now need that UK mortgage footprint and the minimum loan of 500,000. So we're kind of out of the space of the first-time buyer, first-time landlord for foreign nationals, expats, but we are still very much in the market for lending to those types of customers.
Okay, and last question. On your bridge to term product, does the applicant have to stay on the bridge for the full 9 months, or is there some flexibility on this?
So we basically give them the option. So they're tied in for the first 3 months, and then they can actually exit. So if they've completed all works on the property or they've gained their landlord experience and want to exit elsewhere, they can exit from month 4 up to month 9. But similarly, if the customer has completed any works that we're doing and they want to remain on the bridge to give themselves that time to kind of start bringing money into the property, getting tenants into the property, marketing it out, they have the option that they can stay on it. So it's very flexible from month 4 to month 9. They have the option they can exit or they can stay on it. It's whichever works best for them.
Okay, and last question we got from Jay. Is there a maximum period that owners and family can use their holiday let?
So from our proposition, we're very much doing it as a holiday let to let out to others. So we don't usually allow people to stay there themselves. From that point of view, we don't have a limit on that period because we don't offer that option, unfortunately.
Okay, a couple of you have asked just about the slides, whether you can have the slides sent to you at the end. Unfortunately, the size of some of these presentations is quite large, as you can imagine, but all of them will be made available on our website. It probably normally takes about a week. My IT team will then edit them down and then put them on the website. So if there's any ones that you particularly want to see again, just go onto the website in about a week's time and everything's going to be available. Leanne, thank you very much indeed. Somebody is typing a question, but you might not be here. So my IT team will take you out of the meeting. Don't close yourself down, because we did have one once who almost closed down the whole meeting themselves. So so I will now put on the next presentation. And Leanne, thank you very much. We'll see you soon. Thank you. Just whilst Leanne, we're waiting on the next one just to load up, just Castle Trust for us now, a very big part of what we do. We have in the region of about 20 million quid worth of business pending with them at the moment, and 14 million of that is at solicitors. So as you can imagine, it's something we are very, very much a big part of our plans, and we are on their premier panel and access to the exclusive products as well. I will start immediately and introduce our next speaker, which is Gaynor Morgan from Yorkshire Bank Commercial Mortgages. Sorry, Yorkshire Bank, Yorkshire Building Society Commercial Mortgages. I almost got that right. And you should have received this from us on email today. There's Gaynor. Hi, Gaynor. How are you? Can you hear us?
I'm not too bad. I can hear you. Can you hear me okay?
Hear you absolutely perfectly. Fine. Okay. Perfect. I don't know if you've been watching. We've had some horrors this morning.
Oh,
last presenter didn't appear at all. So make sure your laptop's plugged in. And
I'm plugged in. It's switched on. I'm good to
excellent.
go.
Okay. Maybe put some 10p's in the meter for the Wi-Fi, maybe, whatever you need to do. But because don't want anything else going wrong. So anyway, we'll crack on. So should have received this this morning. And a little bit about Gaynor. She's been with YBS, which is previously Norwich and Peterborough, for coming up to 18 years. Spent 10 years working in residential lending before moving into commercial lending, where she's happily been for the last 8 years. She has experience in dealing with commercial investments, owner-occupied loans, corporate and personal buy-to-lets. Over the course of her years within the finance industry, Gaynor has enjoyed developing her knowledge and skill sets. This is the bit I was really, really dreading this part, so I've got to try and pronounce these, and has completed her CMAP, easy, DIP, BB and C, and has recently passed a DIP FA. So I don't know what the last two stand for, but I'll leave.
I'll give you. So one's the equity release, and one is the business banking and conduct diploma, and then obviously the financial advice diploma.
Okay. I've got my CMAP and 4 O levels, and that's about it. So that's me done. I'm not big on exams, unfortunately. So, an interesting fact about Gaynor. Gaynor is a second-degree black belt and has won numerous British, European, and world titles over the years, and has had the honour to travel around the world to do so. Gaynor has also won Peterborough's Sportswoman of the Year twice. So congratulations, Gaynor. Are you still competing at all, or?
No, I retired a few years back. I just like to dabble now and again. So I get involved with different training bits and pieces, but not competing to the level that I was.
She dabbles with brokers when they disagree with her. Just be aware.
Yeah.
Right, Gaynor, over to you. I'll see you in about 20 minutes. Looking forward to this one.
Fab. Thanks very much. So as Tony sort of alluded to, I am Gaynor Morgan, one of the relationship directors here at the Yorkshire Building Society. Again, as sort of mentioned, I have been with the society nearly sort of 18 years now. Initially started in the residential team before moving through to commercial. During my time, obviously, there's been many changes within the society. And I suppose one of those bigger changes being the merger with the Yorkshire Building Society in 2011. Whilst that merger was sort of 10 years ago now, doesn't only seems like yesterday, the commercial team continued to operate under the branding of the NMP until approximately about 3 years ago. And that's when we rebranded to YBS Commercial. Fast forward to where we are today, 2022, we're now a team of around 60. We're operating out of 4 regional hubs located in Peterborough, Manchester, Birmingham, Bristol. I myself am based out of the Peterborough hub, working within the South East team. YBS Commercial Mortgages, we're a relationship lender with a focus on dedicated personal service. We're backed by the Yorkshire Building Society. We're a strong and stable lending partner, helping you deliver your clients with long-term mortgage solutions. With that said, I'd like to emphasise on us being a relationship lender. In order for an introducer to place business with us, they would need to be on our panel, which at present sits around about 200 firms, with us not really looking to increase this much more beyond that. Therefore, any business that needs to be placed with us needs to come through Tony and the team, who are registered with us as one of those introducers. So what do we do here at the Yorkshire Building Society? Let me just flick through the screens. Bear with me. So there we are. So as you can see on the screen, we have several strings to our bow, and we're able to consider transactions in the following areas on there. So that's buy-to-lets, holiday lets, HMOs, semi-commercial, owner-occupied and investment deals. We also, under the buy-to-lets, it is limited company as well as sort of an element of personal buy-to-lets. What's been refreshing to see as an employee of the company is that our desire to continue to grow and develop the offerings that we're able to give you guys. Even during the troublesome period of COVID, we were able to keep lending to our clients and even introduce new products. So pre-COVID, we weren't sort of offering on HMOs, holiday lets, and we didn't have sort of the semi-commercial products that you see today. So that is refreshing to see that even during that period, we were able to continue to support you guys. For the majority of our products, we have a minimum loan of 500,000. There are some exceptions to this, which will become apparent as we go through the information further. We offer terms from 5 to 25 years and would typically look to lend to customers up to the age of 75. That can look to be based on the youngest party involved. Lending can only be secured against assets within England and Wales, and we're only looking to lend to companies and individuals that are UK based and that the UBOs behind those are also based within the UK. Moving on to more specifically about the buy-to-lets, as you'll sort of see on the screen there. At present, we only have two options, which is either a fixed rate at 5 years or a 10-year fixed rate. So the 5-year fixed rate options, you have 3.05, which is up to 65% loan to value, or you have 3.35%, which is up to 75% loan to value. The 10-year fixed rate is just one product, which is 3.7%, and that's up to 75% loan to value. That doesn't change regardless of whether a client opts for a lower loan to value. The rates on these are exactly the same if we're lending to a limited company or if we're lending in personal name. Again, the rates are the same if we're lending on a single asset, a multi-unit freehold block, or a large portfolio of standard buy-to-lets. Through the next screen. So on the screen, as I said, we do have the personal buy-to-lets and the large buy-to-lets. The rates are the same as I mentioned from the previous screen. The difference comes in to effect around the interest cover. So for the corporate buy-to-lets, you'll see on there it's 125%. And then you've got the difference between the 5-year fixed rate and the 10-year fixed rate. And for the large personal buy-to-lets, it's 145% interest cover. And again, based depending difference whether you're on the 5-year fixed or the 10-year fixed, as you can see up there. Lending is based on the lower of passing rent or market rent. So we will ask the valuer to give us an indication of the market rent. Obviously, we'll also look to see what the client is achieving in terms of the rental. Again, on the screen, just a couple of differences between the corporate buy-to-lets and the personal buy-to-lets. So the corporate buy-to-let, as I said, the majority of our loans have a minimum loan of 500,000. That's the same that goes for the corporate buy-to-let. We have a maximum loan per unit of 1 million or 1.5 million if it's in London and the South East. And the large personal buy-to-let is slightly different because of our relationship with Accord Mortgages, which also comes under the Yorkshire Building Society brand. So as opposed to trying to offer within the same market, The large personal buy-to-let is trying to capture outside of the Accord offering. So we can look to lend on large personal buy-to-lets, either of the situations, which is 6 or more properties we're looking to take into charge. The debt size is 3 million or above, or the client has 11 personal buy-to-lets in their background portfolio. So all of those would fall outside of something Accord could do. So we would look to be able to offer a facility for the clients if they meet those requirements. Again, max loan per unit is £1 million unless it's within London and the South East, and then it's 1.5 million. We can consider lending up to 20 units in a multi-unit freehold block. If it's a new build, you're looking at 16 in the block. Where we're lending on 5 or more units within the block, all properties within the same location, we would expect the valuer to give us a block value discount. Majority of the loans for the buy-to-lets are on an interest-only basis, but obviously if a client wishes, they can proceed on a capital and interest. Don't have any issues with that. Lending, as I said, we can look to go up to 75% loan to value. The only sort of restriction on that for the buy-to-lets is if it is a new build, where it's a new build flat, then we are restricted to 65% loan to value. Studio flats can be considered, but we're ideally looking for properties with a minimum square footage of 35 square metres. Properties are required to be let on a standard AST or a corporate let up to 5 years left on the lease. Arrangement fees for both products are 1.5%, and a procuration fee of 0.75 will be paid for that. With our buy-to-lets, we are looking at taking guarantees. We do look to take them on all the corporate applications. The amount that we take can sort of be discussed and negotiated, but we would be requiring some level of PGs, and there's no sort of waiver around that. So moving on from the buy-to-lets, we have our HMO product. As I said, this is something we've recently sort of introduced, so it's not the biggest of Arsenal at the moment in our offerings. Apologies, I think where it's on the screen, it's shrinked it a little bit. So the product that we've got, it is just one rate, which is a 5-year fixed rate, and it's 3.8%. Lending is based on us not exceeding 75% of VP or 60% of MV. We are looking at an interest cover 135% at higher of 3% or pay rate plus 0.3%. Maximum number of units, beds that we go up to is 12. We can consider properties that are let to students. That's not a problem, but what we're not able to consider is purpose-built student accommodation. So your big blocks of 50 sort of beds, just because we're obviously looking at alternative use. As stated on the screen, we're looking for assets that are in a good location with good rental demand. We do have a slight reduction on the minimum loan amount for these type of assets, and that's 400,000. And the maximum loan that we can do per unit is 1.5 million. Next product that we have is our holiday lets. So you'll see there on screen. Again, it's just one rate at the moment, which is again another 5-year fixed rate, and that's 3.85%, and we can go up to 75% loan to value. What we're not looking for is properties that have an occupancy restriction, so they have to just be used as a holiday let. We don't mind, obviously, if the owners are looking to reside in there for sort of 60 days of the year, and that's not a problem. But again, we're looking for assets that are suitable for both AST rental or a holiday let. Rental coverage is 125% at either higher of 5% or pay rate plus 1%. What we're looking at is basing that on the holiday let income, taking into consideration any deductions for letting agents' fees or business rates. Happy to consider properties that are just being acquired for first-time holiday let use. So obviously the clients are not going to have any history of rental. The valuer would be able to give us an indication of the rents based on the holiday let, looking at the seasonal trends. They'll obviously speak to local agents to understand sort of the highs, lows, and middle peaks for the area. Properties need to be standard construction. and then, as I said, just not to have any occupancy restrictions attached to them. Moving on, we then go to talk about our commercial offerings. So this is commercial investments, owner-occupied or semi-commercial. We'll go through them a little bit more in detail. All loans are individually priced and they're done on the merits of the application. So we'll look to take a risk-based approach when considering them. Type of things that are taken into consideration when we review them is sort of the loan to value, location, type of security, type of tenant, what the break options are in the lease that's there, and the client themselves, their background, experience, when we sort of factor in the offering that we're prepared to do. Most of our products are variables, and they're variable products, so linked to the Bank of England base rate, and they'll be priced between typically 3.5% to 4.5% over the Bank of England base rate. We do have 2 semi-commercial products. These are fixed rates, and I'll cover them a bit more as we go through, but they are specifically attached to assets where you've got 50% of the capital value of the property coming from a residential element. Facilities can be anywhere between 5 to 25 years, and the term of the mortgage is not directly linked to how long is left on the lease to run. We understand, obviously, these days it's quite uncommon to find 15 to 25-year leases, more typically sort of 3 to 5 years. Again, it's sort of taking a risk-based approach in terms of the loan to value that's being offered, who the tenant is it a single asset tenant or is it a mixed bag? Loans can be considered up to 75% loan to value, although we do have some restrictions in place around that, which would see a sort of a maximum of 65%. And that is generally for properties that are pure retail investments, offices, or owner-occupied proposals. Lending is typically based on the lower of MV, VP, or purchase price. The only exception to that is where we're looking to lend to an asset that has what we define as a blue chip tenant in there. So somebody who's done a Bradshaw rating is 5A1 and above, and it's sort of tenants such as Sainsbury's, Iceland, those type of tenants in there. For that, I can look to potentially lend against the MV, provided we don't exceed 100% of VP. CITES definition of an owner-occupied proposal, that is where the borrowing entity is exactly the same entity that is occupying the property. If it is a tenant in the property as a subsidiary of the company that's buying it, or it's another company that's owned by the same UBO, whilst we understand the links to the different companies in the UBO, it wouldn't be treated as an owner-occupied proposal. So lending would be looked at on an investment basis and the rental income to support the coverage. Most of our commercial loans are on a capital and interest basis, although we can consider part and part and potentially 5 years interest only options, with the remainder being sort of over a C&I basis. Again, there are restrictions around those, so if you are looking for interest only, have that discussion with us sort of up front. I'm not sure if one of my screens has gone off there. I think I've lost one of my slides, not to worry. You'll see obviously on the screen about the debt service cover. So if it's an investment deal, you're looking for the rent to provide 100% debt service cover at either 7.25% or pay rate plus 3.25%. If it is an owner-occupied, obviously instead of the rental income, you're looking for the EBITDA to provide that coverage, again at 7.25% or pay rate plus 3.25%. If the tenants are if it's going to be an owner-occupied, but the tenants, the company are still looking to maybe let part of that, so where they're buying a semi-commercial, they're going to occupy the commercial for their business, but then rent the flat independently, I can look to factor back in the rent when I'm calculating the debt service cover. Just have a quick nosy. A couple of other big points, I suppose, to add about us. So obviously I can look to take into account any sort of add backs for rent if we're looking at owner occupied deal, if somebody's already paying for a premises, obviously making sure that they can exit that quite easily and they're not tied in for a number of years still into that. As I said, we can look to add back in any rent from any other elements of the property if it's going to be a let out as opposed to owner occupied for those elements. At the moment, we don't have any appetite for hotels, bed and breakfast, vehicle showrooms. They're not currently sort of where we are. Not to say we're not going to come back into those, but at the moment we feel comfortable in the selection of products that we've got and the areas that we can look to lend to. Industrial, retail, offices are all fine. We're a bricks and mortar lender, so we're not looking to lend on land alone. We will look at an asset and look at the alternative use that it's got. We don't insist on any business banking, simply because we don't have any banking facilities to offer. We don't generally take a debenture, so we're obviously happy for the clients. Well, we understand challenges around sort of doing that. Can look to lend in personal name, corporate structures, as well as SIPs and SASs when it comes to commercial. It can be an established trading business. It can be a new SPV. We understand there's different sort of rationale for clients purchasing in different elements. Take first legal charge over the property, as well as taking an assignment of rent in terms of the occupational leases. Again, if we're lending to a limited company, we'll look to take sort of an element of PGs. Arrangement fees for the commercial loans, 1.5%, with a 1% prop fee payable to you guys. And one thing obviously to note as well for all our applications is the link that we have with our underwriters to be able to discuss any proposals, iron out any quirks, and just make sure it's something that they're happy to support and consider before we sort of get behind the full mechanics of going to valuation and assessing sort of the full application. The last page then for me to sort of cover is details about sort of our minimum landlord experience and our lending exposure limits. So you'll see on there sort of the different sectors, different product offerings and the maximum that will go up to depending on the type of product. Again, this is something that we've been able to increase even during sort of times of hardship. So up until probably the last sort of year and a half, 2 years ago, you were looking at a maximum sort of exposure of £10 million. We're now able to go up to sort of £20 million for existing customers, which I think is great to be able to do. Whilst I know there's been a lot of competitors that stopped lending during those periods, as I think this shows our commitment to continue to grow and continue to lend. HMOs, as you'll see on there, as I said, it is something that's new to us, so it is still something where the maximum exposure is a little bit lower than the other offerings, so it's up to £5 million, and we are looking for clients who have got experience within the HMO sector within sort of the last 12 months. I hope that gives you sort of a bit more of an overview about the type of products that we've got, our offerings. I know it's probably a bit just talking at you. So obviously, if anybody does have any questions, any queries, feel free to obviously pop them across to me or Tony.
Dana, thank you very much. We haven't got any at the moment, but you did set yourself 5 questions, so there you go. First question, do YBS lend offshore?
No, so we are all UK based. Everything, the UBO or the limited companies need to be sort of sat within the UK. I may be able to consider elements where if you've got a family company, one of the shareholders who is a minority shareholder, so somebody who's sort of maybe 10-15%, but has no running of the business, no control, so no directorships, it is maybe situated abroad, then that might still be something I can consider, because obviously we wouldn't class them as a major factor in the application.
Okay. Second question: are there any sectors that YBS do not lend in?
So as sort of mentioned, I suppose the bed and breakfast, hotels, vehicle showrooms aren't there for us. That there's still going to be, I suppose, a little bit of reduced appetite around pubs and restaurants, just with a bit of care on those areas. But as I said, the only ones that are fully out for us is hotels, bed and breakfast, and car showrooms.
Okay. Next one: do you offer any green products?
So not at the moment, but I know it's something that we're in talks to potentially maybe get some sort of offering in there, because I do know it obviously with the EPC changes, and again the requirements for them to be improved in the next couple of years. It may be an avenue that we go down.
Fourth question: do YBS offer any fixed rates on commercial?
So commercial, the only fixed rates that we've got are on the semi-commercial products. So that is 2 products, which is a 5-year fixed rate and a 10-year fixed rate. The 5-year fixed rate is 4.35% and the 10-year fixed rate is 4.8%. They are only available for properties where the asset value, 50% of that comes from residential. So outside of that, there is no fixed rates for commercial at present, but hopefully watch the space.
Final question: what are your USPs?
As I sort of said at the beginning, I think for us it's being a relationship lender. You will all have sort of direct access to a lending manager, relationship director. So we're on the phone, we're on the emails. You can get hold of us to discuss any applications up front. If you think there's anything that's quirky, that might be sort of a killer for a deal, pick up the phone and have that chat with us. As I said, the products are what you see is what you get. So for the buy-to-lets, as I said, the rates are set whether it's a single asset property or a multi-unit freehold block. We don't charge for the difference in those.
Okay. No questions from delegates, so you must have answered everything that they wanted to ask.
Or they fell asleep. I'm hoping it's the first.
Thank you very much. My IT people will just take you out of the speakers, so don't close it down. And thank you. We'll see you again very soon.
Thanks very much, guys.
Good to see you face to face after all these years as well.
Yes, definitely.
Pre-lockdown. There you go. Thank you, Gaynor. Right, everyone.
Thanks,
so we now have our our next talented person, talented speaker, which is Lee Williams from Shawbrook Bank. And there he is. Can you hear us, Lee?
I can, yeah. Can you hear me okay?
Yeah, I can hear you absolutely fine. Okay, the reason this might go wrong is that there are actually 2 speakers from Shawbrook today, I believe. Is that still the case, or?
Yeah, Danielle should be joining us as well.
Fine, okay. So hopefully won't go wrong. Then well, let's wait. I'm not going to try and second guess what's going to happen in the next hour and a bit anyway, after what's happened so far. So just a little bit on Shawbrook. First of all, you would receive this on email today when it works, which it should do any second. As you can see, that's their product guide, which covers basically the unregulated side of their offering. A little bit on Lee first of all. Again, when my slides are taking an age today. So Lee is the Regional Development Manager for Shawbrook Bank, covering East Anglia and Essex. He's been with Shawbrook for 4 years, and prior to that, he has 30 years experience in financial services, predominantly with high street banks. Lee looks after 115 brokers in his region, each one of which, by the way, he sees every single month. I just want to point that out. In his region, helping with regulated and unregulated bridging, buy-to-let and commercial and semi-commercial investment mortgages. His speciality is working with brokers to shape large loans to present to their complex deal forum at an early stage board approval. Hi, Danielle, how are you?
I'm very well, thank you. Hi, Tony. Thanks for having me. Sorry to cause you problems with the technology.
And the software is working, everyone. Wow. We haven't got an introduction for Danielle, unfortunately. Well, I have sort of, but it's not on screen, so I'll probably just read it out when this one. So Lee's interesting fact. There you go, another talented person. So Lee is a keen snooker player, which is a misspent youth, apparently, and has won a couple of amateur tournaments at local club level and once played against a professional player whose name was Barry Pinches, I believe.
That's it.
And he lost.
Yeah.
So
I did lose, yeah.
But he still played him, which is more than I've ever done. Just as far as Danielle's concerned, because I literally only found out about this at 9 o'clock last night. Danielle has been a field-based specialist finance since 2016, specifically focusing on bridging finance for various lenders. She joined Shawbrook in February 2022, where she looks after the North, Wales and Scotland, specifically focusing on larger bridging loans and second charges. Danielle has worked on a variety of complex deals from cradle to grave, including land purchases right through to development and exits, as well as turning over properties herself, so she's well placed to be able to be of support. Outside of work, Danielle is a lover of the great outdoors, Welsh Rugby Union, and is a self-proclaimed foodie. There you go. And Danielle used to do presentations at our physical shows in a previous guise prior to Shawbrook. So she's someone we know very well, and she's a very, very good speaker. So that's me finished. Over to you two. I'm not sure how you're going to do this. So Walk my wires type act, but I can't wait to see, because it's the first one we've ever had. So over to you two.
Thank you. I thought we'd do something different just to shake it up a little bit. But yeah, so I just thought, as Danielle's recently joined us, it'd be a good opportunity to introduce her and her role to everybody, really. So Danielle joined us, probably 2 months ago now, is it, Danielle?
Yeah, 14th of February, Valentine's Day wish come true.
Oh, that was it, yeah. As a specialist regional development manager focusing on bridging and second charges. So I'm going to let Danielle sort of run through the slides. I'm going to jump in on the case study, as it was one of my cases, and we'll answer any questions at the end. Thank you.
Amazing. So I'm assuming we can control this slideshow. So obviously, thanks, Tony. Thank you for introducing me. I know a few of you will know me already because I've been knocking around for the last few years, and fairly recently joined Shawbrook to specifically look after bridging and second charges, actually. So it's really well timed that we can be on this call today and specifically focus on bridging. To give you guys a little bit of a headline as to how the team looks. So as Tony quite rightly touched on there, I look after everything sort of upwards of Milton Keynes, and my colleague Jazz, who you will see a lovely little mugshot of at the end, is looking after everything further south. So Jazz will likely be your main point of contact, but of course I am here to support wherever needed. Just to give you a bit of an idea about Shawbrook as a business, what I don't want to do is sort of read everything through word for word and make you lose childhood memories, but I think over the last 10 years of our lifespan, we've seen massive growth, and specifically around the commercial side of term mortgages. The goal is moving forward for us as a bridging team to really, I suppose, start focusing on how we can be the market leading specialist lender in bridging. We've managed to form a specific team made up of talent from all different bridging lenders in the industry at the moment, and we're here as an additional layer of support to the guys that are out there already. So we're not here to take away from them. Please don't ever panic and think that, Lee's gone on an extended holiday to the Maldives, because I know he's off there in the not too distant, but he will be back. We're here to look after the complex and the higher net worth deals that you'll see hopefully crossing your desk at some stage. Okay. We've got market leading technology, and I don't just say that as I work for Shawbrook. I have to tell you how good our technology is, because I'm a self-proclaimed useless person when it comes to anything technical. Okay, the technology that we've developed is very similar to that of our buy-to-let portal that you guys will have used already, and I know that the majority of your bridging cases will be sent over to the guys at SFS for them to submit through. But what we're trying to achieve is a really quick, efficient turnaround, and really put ownership on you guys to be able to fully control how it goes through the process, right down through the submission, the format of the bridge, and through to the valuation. So far, we've originated over £6 billion worth of business. We've got plans to continue to grow, hopefully, much quicker. And for any of you that are interested in reading results, they're live now if you fancy a bit of bedtime reading to see what Shawbrook have been up to for the last 12 months. So our property finance division is, I suppose, quite separate to a lot of the business that the bank do. And what we're very proud of at Shawbrook is the fact that we can take business from cradle to grave. So truly from, purchasing maybe a piece of land, through to bridging, through to development, and actually we exit the majority of our business that comes through on the bridge where they're looking at retaining the property. So that's actually a really big win, because not only have we got the option to be able to retain that customer and work with you guys, you know, over a longer span of time, we can also cut out a lot of the heavy lifting underwriting that may need to be done for bridging lenders that can't retain their own business, such as asking for extra documents to confirm where it's going to be placed at the end. You know, just essentially really understanding the deal right throughout its lifespan. So, as I mentioned, your process essentially is myself and Lee looking after the front end of bridging, and Jazz specifically in your area, right through to then Lee picking up all the hard work at the back end, and looking after anything that's going to be exited out with Shawbrook. We wanted to sort of display a little bit on screen as well the kinds of things, the accolades that we've won over the last sort of 1 to 2 years. Continue to put a huge focus on our specialisms and really invest in the people that we work with to make sure that we have got the expertise there for people to fully understand the transaction, and as a result being able to deliver to you guys you know, the best service that we possibly can. So I've already probably got a little bit overexcited and spoken to you already about the application portal. That is how simple it is to use, and that's how excited I am about it, as somebody that's spent the last 2 or 3 years doing everything manually through Excel and dodgy Word documents. But we have got that there, and it does work really well. For anybody that's looking for a quick quote, you can actually also get your own heads of terms on the website. So you can pop it into the calculator. You don't have to try and figure out any complex calculations in the background like loan to cost and you know, the retained interest. It will work all of that out for you, and it will give you an idea as to how much it's going to cost your client and what your net loan will be. The relationship team are there. So not only have you got your customer facing BDMs like myself and Lee and Jazz and everybody else that's out in the field to support you, we've also got 2 ex-underwriting relationship managers who have joined us from Glenhawk and Lendinvest. And what they're there to do is to look after any larger loans. So anything upwards of £500,000. If you're lucky enough to get something like that lend across your desk, you do your little victory dance and then send it over to us, and we will speak to Tom and Jack, who will essentially almost pre-underwrite it, but foresee any potential issues that could come up, and talk you through how we can overcome that before we get into underwriting, where it becomes much trickier. Because you know what underwriters are like. You know, it's no different at Shawbrook than where it is anywhere else. Once they've made up their own mind about something, it's very difficult to change it retrospectively. It's much easier to almost convince them upfront of what we know to be true. Excuse me. Our system's really clever on the technology. We have the facility to AVM a large proportion of the loans that we do. That's not to say that you have to AVM, but of course it's a cost-saving exercise for your customers. It can work really well if they're looking at maybe buying something at auction, they need a quick turnaround and don't have the time to be able to wait for a physical valuer to get through. What the system will do is it will bring through the AVM result for you on the portal, and it will actually allow the maximum loan available based on the AVM. So sometimes that can be a really nice surprise and it's ended up being more than what you thought. So happy days, there's more available. If it falls short, you do have the facility to override that and come back and actually physically instruct evaluation. I've already touched on how simple it is to get through to term. It's already with us. You know, we know the customer, we know you as a broker. It's very straightforward to then exit out on a completed project to a term deal. Okay. I'm not really going to say anything more on this, to be honest, because I think I've already been quite enthusiastic about it. This is a little bit more information around the portal. I don't know how much you guys use it. I'm told that most of the business is submitted straight through to SFS and they will use it. So I think the guys at HQ are probably going to be more grateful for it than perhaps the people sending over the inquiries. So let's get into the nitty gritty on bridging then. So what I'm not going to do is start going through every different scenario that you may come across for bridging. But I think for me, it's very much about how you can spot the opportunities, because let's be honest, the majority of your customers will not be sitting in front of you asking for a bridge. If we look back over what's happened in in the financial industry over the last few years. I think bridging finance has traditionally had a really bad reputation. It was up there with equity release as being really expensive. It wasn't really looked at, and 9 times out of 10, no one really cared about how the exit was going to be achieved. Things have massively changed now, and actually we are much more, well, not us specifically, but as an industry, much more responsible for the full cradle to grave process. I'm sure when you were kids, you will have played the game Yellow Car. So, you're driving down the motorway, you're driving, I don't know, to Cornwall or somewhere like that, and your mum and dad are trying to keep you entertained and, right, let's look for yellow cars, because you don't always notice them until you start to look for them. And I think that's very similar to bridging. Until you can actually see how to look for the opportunity, they may pass you by without you noticing. So, although I've got the product details here, just giving you guys an idea, of course, you can see that undeniably market leading rates. It starts with the basics of you actually understanding on how to look for the opportunity for that bridge. So as brokers, we're very reliant on you guys to know the customer and know their scenario. And what we're trying to do is achieve the end result. Okay. So how many times has a customer come to you and said, oh, I want, those 100% mortgages, do you still do them? And you think, no, we haven't, that's very 2007, isn't it? You can tell when I started in the industry selling mortgages at that kind of thing. But in reality, we can 100% fund. So you may have customers that come in that are maybe cash poor, but have got assets in the background. They have got plans that they want to take a property and really add value. When I first started flipping properties, I was never going into it with the intention to do that. My circumstance was I went in, bought an ex-council house that was absolutely knackered. I did it up. I think I bought it for something like 90 grand or, something ridiculously cheap. And 12 months later, it was at 145k just by tarting it up a bit. Now, I was really, really lucky. Like I say, it wasn't my intention. But actually, there's a lot of people out there that are very switched on to this kind of opportunity. They may not know it. They may come and sit in front of you and say, well, I'm looking to buy this house down the road that I've seen. I think I could put a new kitchen and bathroom in and it could be worth, really something special, sell it on and do the next one. It's not all about grand designs, these 18-month, 5-year jobbies that actually end up costing a small fortune. So if you can associate that with, okay, well, we could look at potentially doing that on a light refurb with Shawbrook. You're either going to want to sell it or retain it at the end. We can purchase it. What we can actually do is we can do 75% of the day one. So, pretty akin to what you can get on a standard buy-to-let mortgage, if that's the way that they're going with it. But on light refurb, we can allow an additional 10% for the refurb costs as well. So they may be putting in their new kitchen and bathroom. They may be doing a few licks of paint, maybe landscape in the back garden. We can provide 10% in addition to that 75% of the day one for them to actually go in and do those works. Okay. Now, please bear in mind that is all net plus fees. So we're not going to be taking any arrangement fees off that. So straight away, you're maximising what they can get out of it on the first day when it draws down. What we've then got the ability to do is exit out of that onto a long-term buy-to-let, or if, I don't know, they change their mind, they're planning on moving in, then obviously that would go elsewhere. But of course, anything non-regulated can stay with Shawbrook as a term facility. And they'll be able to capital raise then to the maximum loan to value limits on the term product. So it's just little ways that you can actually look at really adding value to your customers and how we can make their transaction much smoother. The bridging and light refurb rates start from 0.4. Just to give you guys an idea, we like to keep it simple. So there's nothing really complex about how we look at our rate structure. 0.4 starts for loans above £1 million. Anything below £1 million is 0.5, and it goes up in the loan to value bracket. So 50% loan to value, 0.5%, 60%, 0.6. No prizes for anyone guessing what comes next, okay? But regulated bridging, same sort of thing. Anything up to 75% loan to value, of course, we're stuck with 12 months on reg bridging. That isn't a Shawbrook thing, that's a regulatory thing. But, realistically, we can work from loans anywhere from 50,000. It says 15 million on here. In reality, we can go up to £35 million per client. If any of you get one of those, don't go to Jazz, come to me and we'll do it together and you can retire and we'll all be very happy. Okay, I'm joking, you can go to Jazz, it's a team effort here. So there's a flavour of our products for you. Why would you work with us? Well, before we jumped on the call, Lee, as I've mentioned, Lee mentioned to me that you guys generally just send everything over to the SFS office anyway and they'll look after it for you. So I think the big one for you guys is just knowing that you've got a surety of exit if you put in any of the shorter term deals with us at the front end, because we can look at it, we know the customer and we can make sure that it's something that we can retain. Of course, everyone's circumstances change, but actually a big red flag for a lot of people looking at doing bridging finance historically has been, how am I going to exit out of this? If you can box that off at the beginning when you're seeing them in your first or second fact find, then actually that's going to make your life a lot easier. You have got access to everybody that you need to access. You've got myself and Jazz for, you know, the juicy bridging, should we call it, the stuff that's a little bit, you know, more complex. Lee, obviously expert contact for all things term, commercial, second charges. You've got access to underwriting, access to my sales team for the larger loans. And everything is done super quick. Everything is instructed on day one. You guys own the valuation. Lee's going to talk to you in a minute about one of our successes in the case studies that we've looked at on a recent deal during COVID, just to reinforce how well that works. We've got direct contact with VAS Panel as well, who are our valuation partners. We also use appraisers if we need to, but VAS for us are more specifically on the bridging side of things. So other things to come that we will update you as and when are things like dual representation. We're working on a project at the moment to get that into place. But essentially, your customers can use whichever lawyer they want, just get them engaged ASAP. I say that with a caveat. If you're dealing with a bridging customer and they say to you, oh, my solicitor John's going to do it all for me, he does everything, he did my divorce and he looked after a little bit of land for me not long ago, approach those sorts of deals with caution, because generally John the divorce lawyer won't understand the ins and outs of bridging, and of course they are very time sensitive. So make sure that whoever they're going to be using is somebody that is really au fait with bridging and could understand the urgency. Because I've seen some very good ones, but I've also seen some very bad ones, and we don't want to replicate that. So, of course, just approach with caution, as well as all your different options for your servicing, for your interest. So if you've got somebody that maybe has got good income and they want to maximise that on the day one cash out, then, of course, they can look to service that. We can look at part and part, and we can look at fully rolled as well, which means that it all comes off at the front end. Take a breath and move on. So we've touched on a few reasons already why people may want to use a bridge. We've talked about, obviously, capital raising for light refurb. One that I've got on my desk at the minute is actually the purchase of a large property in Coventry with some surrounding land. They want to buy the property for 1.6 million. What their plan is then is to apply for planning permission for some apartments to go on there. But of course, at the moment, it is just a house. So we're looking at providing the bridge for the purchase of the property. They've got an unencumbered main residence in the background. And of course, we can do regulated bridging. So we're looking at, can we 100% fund that deal across the two securities? Once the planning gain has been granted, or if it gets granted, which it's looking likely it will, they will flip that over to a development loan with our development team at Shawbrook, build it out, and then they'll be exiting out with the long-term Shawbrook deal. So actually, it really is a true reflection as to what we can do in-house. Excuse me. Commercial bridging, absolutely fine with as well. So anything semi-commercial, anything fully commercial, we're fine with. Obviously, there's things we can and can't do. We are working on getting land with planning onto the full criteria. We can look at those deals on exception at the moment for the right kind of thing. But of course, there are things that we don't really like, such as equestrian centres and farms and stuff like that. So just use us for any support that you may need. Regulated bridging, very straightforward, slightly different process. So we still ask for a paper application form, but we're more than happy to help you go through that. That includes any capital raise and any like refurb. I don't know, a lot of people really off the back of COVID have realised that it's maybe they're not living near their family, they're very lonely and isolated, but they want to move closer to the kids and the grandkids and, you know, just have a better quality of life. So we can use it for downsizing as well. And also we can take multiple security if needed for that. Divorce is probably going to be through the roof, let's be honest, off the back of the last couple of years. I was lucky enough to already be divorced by the time COVID hit. Otherwise, I'd have been probably up for trial for murder by now. But, you know, in reality, we are seeing a lot more divorces come through. We can use any regulated and non-regulated bridging towards that. Also, if, you know, trying to purchase equity or what have you. Just going to hand over to Lee then. Lee's going to go over the case study for one of his deals, which isn't on purpose that it was his deal, but because it is, I thought it'd be really nice for Lee to give a first-hand account of what happened here. So thanks for listening to me. Over to you, Lee.
Thanks, Danielle. Yeah, thanks for that. I thought that was really useful for you guys to hear sort of when you send the case over to the office at Specialist Hub and the advisors there are submitting a deal to us. You can now see the sort of level of technology that they've got to be able to act quickly and get you heads of terms really quickly, and also, you know, the wealth of support in terms of people that we've got on the ground to be able to work those more complex deals and get the money out the door as quick as we can, which is obviously the goal with bridging. So I hope that was useful. But yeah, this is a case study that I did during the first lockdown. So it was a customer that came to us with an urgent auction purchase where we had only 2 weeks left before the deadline was up. The first challenge we had was that there was no valuers able to go and visit the property within the timescale. So we managed to get an off-panel valuer, which we wouldn't normally do, but as an exception managed to get an off-panel valuer to go and inspect. In the meantime, the underwriter was reviewing and underwriting all the documents that had been provided. Solicitors were doing their work because they were appointed on day one. Right at the last minute, day before completion, we had another hurdle to overcome in that the auction had been won in the customer's personal name, but they were buying it in their limited company name, and the auction house wouldn't change the name to the limited company. So we had to overcome that by doing a purchase effectively between the sellers and the client, and then another transfer between the client and their limited company. And we managed to overcome all of that on the day before completion and completed on time. So it wasn't the biggest loan in the world. It was 155,000 on a 12-month term. They did some work on the property, and then they've refinanced it onto a term loan as they were retaining it. So a really good example of how we can sort of act agilely and quickly to overcome hurdles. And as I say, I would certainly have no hesitation in putting those kind of quirky deals or any deals to us because of the level of experience and support that we've got, as well as the technology. So I hope that's a good example. That's that from me. And now, thank you very much for listening to us both. I'm glad it all worked okay technology wise. But Tony, open up the floor to any questions.
Okay, yes, yeah, thank you both of you. Yeah, I was panicking big time, but that worked actually very well, I must admit.
There you go.
Okay, we haven't got any questions from the delegates, so we'll go to the questions that you set yourself previously. Do you have any exit fees on your bridging loans?
No exit fees on any of our bridging loans.
Which is good. Is interest debited? This is actually a very, very useful question. Is interest debited monthly? I.e., if you go one day into the next month, do you charge a full month's interest?
Absolutely not. No, we don't charge any default rates. So that's actually a massive win for us at Shawbrook, because a lot of our competitors and our friends in the industry do charge quite significant fees if they go over term. We don't charge that. To be honest, we don't really come after. God, it sounds sinister, doesn't it? We don't come after anybody for that. What we do encourage them is to maybe refinance, and we'll look at exiting the previous bridge with a new one. But in practice, you know, it's very rare that happens.
Final question is, can you lend towards the cost of works? I think you've already answered that, but that's a big yes. Yeah, you can.
Yeah.
And do you want to just cover that particular product? I didn't see it in the presentation, but I did pop out to the loo very quickly, so maybe I just missed it. The product where you go up to 85%, was that mentioned?
Absolutely, yeah. So as we sort of touched on, we can look at 75% on day one with an additional 10% towards the build costs on light refurb. That is all drawn down on day one in one stage, so it's no tranched drawdowns or no sort of time to wait and any proof needed for them to be able to access the funds. We are also currently working on moving that over to make it work for heavy refurb also, and watch this space for 100% of refurb costs to be coming over the coming months. Is something that I'm working quite closely with the office with, so we're hoping to have that very soon.
Excellent. Okay, well, thank you both of you. Once again, don't let my IT team take you out of the as a presenter, otherwise you could shut the whole thing down.
We'll crash it.
That would really cap my day off.
It went too well already, Tony. We were hoping to.
You didn't see the start, believe me. You didn't.
Thanks,
Thank
Tony.
you for having us, guys.
Right, everyone. So we'll move on to the final part, which is me talking. Some of you will have seen this before, but we do have quite a few new delegates on today. So, and hopefully that will now work. It does. Good. Okay. So fingers crossed in the next half hour or so, we shouldn't have any more issues. That's what I'm hoping anyway. This is just a little bit about us. Now, you've seen 4 lenders that have been in the marketplace for quite some time. I would say probably, and we know the situation with Together at the moment, that they're still very coming back to the wider market because they just want to maintain their service standards. Certainly Castle Trust are a lender that is not looking to take on masses of brokers, so we have packager status with them. Same with YBS. YBS is accreditation process when we was invited back onto the panel after their rebrand was as difficult as the FCA, applying for FCA authorization. So I think Gaynor mentioned they got about 200 odd brokers giving them business. But this is a little bit about why we're slightly different to many of our competitors. And let's face it, we're all offering the same products. But it's just the way sometimes that it's done and how it's done that we see that we're different. So this is just some information about us and what we can offer you. My slides are still taking an age to load, unfortunately. I don't know what's going on today, but I think this laptop's going to be going in the bin after today. So I always start just by talking about, because for those of you that haven't dealt with us before, for those of you that don't know who we are, I could be sitting here talking a right load of old rubbish and you wouldn't know any different. So this is just an emphasis that we do know what we're talking about. So this was our first NACFB visit. This one was actually a face-to-face visit we had back in July 2017. And as you can see, Nick Coles, their compliance consultant, said, I've just read out part of the yellow part. It's a rare occurrence. I feel compelled to reassess my view of best practice, but this is one of those occasions. In reality, I do not see what you do as moving the goalpost, more a case of better than best practice. And quite simply, he said we was ahead of our competition by a country mile. That's what he said verbally. He wouldn't put it in writing. But something we do take very, very seriously. And it's probably one of the reasons why we get absolutely zero complaints, other than the odd trying it on, or other. We have one fraudster that tried to extort money from us a few years ago. But other than that, we just don't get complaints because we do things properly. Then we had another one. This was just before lockdown 2020. And as you can see, I won't read all of that, but we identified no gaps in compliance to regulation and identified areas of best practice, notably in anti-money laundering and data protection controls. Now, our next one is actually was due in January, but it keeps being cancelled by the NACFB. So we're hoping it's going to be taking place this month. So hopefully next month, if you tune in, then you'll be able to see what the latest one is. And I'll put it up whether it's good or bad. But I know it's going to be good. So it will be going up. So how do we work? We work quite simply. There's one phrase that I absolutely detest in financial services. That's the one that's master broker. I don't see that as any type of relationship whatsoever. We offer quite simply a partnership. So in the partnership, in that you are introducing your hard-earned clients to us to help get those through to completion with a lender, and you using our expertise when you need it, or using our packaging products that we've got when you need it. And of course, that's all about trust, two entities trusting each other. So we have to trust that you are giving us the right information. And we do still come across, unfortunately, brokers or indeed our partners who really do try and pull the wool over our eyes and sort of like keep stuff back from us. And it doesn't help anybody because eventually it comes out. It will come out that there's something majorly wrong on a case. The worst one I can remember is that it was hidden from us that the client had been disqualified as a company director, which was actually found out at a legal stage. So the client had already paid for a very, very hefty valuation, and all because the introducer decided to hide that from us. We still got it through, but not with the lender we was proceeding with. You obviously want to make sure that we will say what we do. So I always remember back to 2010, we had a guy that came on board with us as a partner, and his very first deal, he was petrified he wasn't going to get paid, absolutely petrified, and was on me whilst the deal was going through. When will you pay me? On the day of completion, on the day of completion. And when it completed, we paid on the day of completion. Since that day, he has now given me over earnings for him, £500,000. So that's all about the trust element. We can do what we say we're going to do. We're going to pay you when we say we're going to pay you. And it's absolutely vital. I mean, we're not a huge business. We haven't got hundreds of employees. We're a small family-run business with people working here that know what they're doing. And because of that, and because I've been doing this now for donkey's years, I mean, it's like since 1983, I've seen pretty much everything you probably would want to see or wouldn't want to see in financial services. And I know what people want. I know what our broker partners want out of a relationship. They want to get paid, and they want to make sure their client isn't being ripped off. And it's as simple as that sometimes. We want to help you grow your business, be that we can introduce you to lead generation providers that you can trust, be that we can help you with marketing in any way we possibly can, or quite simply, quite often, it's just making sure that you stay compliant. Doesn't matter what your status is. If you're directly authorised, you can do what you want, obviously. So that's most of our introducers broker partners are directly authorised. If you're an appointed representative, we've got a lot of appointed representatives that do come to us on unregulated business because their network is absolutely appalling on that type of business, or the packages that they put in place for that business are also appalling and are ripping their clients off. If you're an exempt professional, your accountant, solicitor, surveyor, then more than happy to accept business from you. Not authorised, there are solutions, but our PI cover now doesn't cover introductions from non-authorised introducers. So we'd have to come to some separate arrangement, be that an introducer, appointed representative, or something of that ilk. But we do have solutions. But the FCA really are clamping down on non-authorised people out there who are trying to do regulated business. And there are still way too many. And we see it all the time. One of our very first roadshow we did in 2017, a guy came to me afterwards and said, I deal in regulated business, but I'm not authorised by the FCA. Can I give you the business, but I can still give the advice? So I said, no, obviously. But he's still out there, still doing business. And that shouldn't be happening. He has been reported, and all he does, he changes his company name and he just moves from one address to another. We want to make sure you stay informed, keep you informed and help you stay compliant. And I'll show you a couple of examples of that because we want to make sure you're right in business indefinitely. In 2008, it wasn't just lenders leaving the market that caused me a problem. It was so many of my introducers just disappeared at that time, which was obviously an issue. All of a sudden, your source of business dries up and your end result dries up as well. So our industry is terrible at keeping you and I up to date. I mean, we quite often have to rely on the financial press, and I sometimes read stuff in the financial press and I look at it and think, what does that mean? You know, what are they trying to say? But it doesn't make any sense. And yeah, pretty much because the FCA and the ICO just cannot communicate properly. I've had an FCA email this morning. I was just checking whilst one of the speakers was going through their presentation, and I have to read it 3 times to try and get an idea of what they were talking about because it made no sense. So here's an example when my screen decides to change. When it came to GDPR, very good example. GDPR, what did the ICO do to assist companies within financial services, but also companies, anything. So, of course, what they did, what any government agency does, they go totally over the top, and they issued a data protection guide that was 318 pages long. You're not going to read that. I started reading it. I got as far as page 5 and then gave up. It's just a complete waste of time. And, of course, what they're trying to do is cover every single industry possible. Well, that's great, but that doesn't help when you're trying to get something sorted out in a short space of time to make sure you're GDPR compliant. So this is what we did, quite simply, because I stumbled across this, and you've had this on the email this morning that I've sent you. I stumbled across this on the ICO website, which was a checklist to ensure you were compliant, and it was great, absolutely brilliant, but not really usable within. You know, how do you keep a record of that? It wasn't. If you tried to print it printed out in about 200 pages. So all I did was to copy and paste it into a document purely for my own purposes. And then realised this would go down very well at our physical roadshows we used to do all around the country. So this has been sent to you. So quite simply, if you've not done anything on GDPR, and believe me, probably about 60% of you that are watching today haven't done anything on GDPR, this is your opportunity to do so, just in case something goes wrong. If you get hacked, if you click on that email that you shouldn't click on, that link on the email you shouldn't click on, and all of a sudden you've got a problem, you will have the FCA and the ICO crawling all over you, because all they will see is fines. And if any of your data is breached and compromised, you've then got the ambulance chasers coming after you as well. So this, at least if you haven't got anything, this at least puts you in a place where you can say, well, look, I did do some work on GDPR, and I have tried to remain compliant. If you have nothing at all, if it's not written down, it didn't happen as far as the ICO and FCA are concerned. It gives you the opportunity to actually show something. So all you do, just print that off, go through each question, make sure either the green ones or the black ones are ticked, sign it, date it, scan it, and then file it somewhere. And then that's your proof. And then what you can also do is, because I also stumbled across this a year after, is the ICO came up with an annual assessment just to ensure, which is half the size of the previous one. And I haven't got a clue what any of the questions are on either of these, because I'll be honest with you, it's irrelevant to me. Because I know we're compliant with GDPR. I know we treat our customers fairly, and everything else we have to do in the normal general running of a business. And that our customers' data is secure and safe. But this is just the annual one, so exactly the same. Print it, complete it, sign it, date it, scan it. If you want to backdate these, you can. It's entirely up to you. But there you go. That's something that has been of use to, over the years, we've found hundreds upon hundreds of our broker partners. Some goods come from GDPR, not a lot, but some good. Obviously, a lot more paperwork, but some good is because for years, lenders have been stealing from us without our consent, stealing business from us without our consent. By quite simply, a deal goes through, and they'll then start contacting the customer afterwards directly, saying, come to us directly. The worst example I found was a lender that actually phoned the client on the day of completion to tell them, next time you want to borrow money, come to us direct, and you won't pay the broker fee, because they will put the deal through their preferred partner, their top producing partner. Now that's wrong. So quite simply, this is what all you have to do. Just ensure that customers do not opt into marketing permissions, because you know how many customers send back the documentation and they just sign it. They don't complete it because they don't know what they don't really know what they're signing. So just ensure with their permission that if they haven't ticked the boxes to opt in, or they have to, if they've left it blank, then just do this. Very, very simple. Right across it, no marketing contact. And then if they do start contacting your customer, I've not seen it yet. I've not actually seen that happen whilst we've actually been running this process, which has been since 2018. So that means our customers aren't being pinched. It's your customers that are being pinched. Not so much ours most of the time. It's your customer. And you're not getting paid for it. And this is one of the reasons why, because we've been getting these now. They've actually stopped sending these, and I think they've realised their mistake. But this was the first one we received in 2020 for a client we wrote prior to GDPR coming out. I'm not going to say who the lender is, but they'd given a further advance to this particular borrower and had not paid us a penny, as you can see. And that was introduced by one of our broker partners, who also didn't earn a penny from it either. Now that's wrong, because it is not their customer to actually be contacting. But they were very active in that, not so much now. But I always just like to finish talking about the ICO just with a little bit of humour, because I mean, you won't have probably seen this at all. You probably know about this if you've attended one of our previous shows. Is in February 2018, the ICO was hacked, and they were hacked with, basically it was, it was malware that would use your computer power to mine for Bitcoin. So if you went on their website, all of a sudden there will be some malware installed, and you will be doing a bit of Bitcoin mining. So if you can remember, maybe your computers were running slow around that time. It's probably because you went on the ICO website. Now, nobody lost their job as far as we're aware. Nobody was reprimanded. This was brushed under the carpet, and there's only about 4 entries on Google on it. So you would imagine, you would have thought, though, that would have been major news. No, absolutely not. But they were hacked. Can you imagine what would happen if you or I were hacked? They immediately coming on the door, hand out, saying, time to pay a fine. That's why it's so wrong. But this, we found recently, absolutely disgraceful. This is shameful, as I said there. If you want access to some free data, the ICO decided that you can quite easily download their entire database of basically every person and every company that holds a data protection license in the UK and outside the UK in some examples. You can download an Excel spreadsheet with 1 million, this is what it was when I actually wrote this down, it's probably more now, 1,048,575 different companies, and over 90,000 of those have an email address. Now, why is that available? Because if hackers were to find that, they immediately can quite easily knock up an email from the ICO saying, click on this link, and all of a sudden you've been hacked. So you're being hacked because the ICO didn't have a secure enough system. It's ridiculous. So what we can offer you, quite simply, I mean, again, we're not reinventing the wheel in what we do. Our products cover exactly what you see there, regulated first and second charges, bridging, commercial, buy-to-let, and buy-to-let second charges. Pretty much the same as everyone else. The only thing we don't offer at this moment in time is equity release. It's not an area that I really want to get into. And we offer two different routes. We either offer packaged or we offer introduced only. And you'll see in one of the slides in a moment how we're able to do this with the same staff, because it is relatively, it's the same process. We're still getting the deal in from start to finish. The only difference is whether we have client contact or not. So we offer package, probably 50% of our business now is packaged. 50% is where a broker partner will just say to us, I don't really know what I'm talking about on this. Can you give the advice and just pay me at the end? And quite often all we get is a name and telephone number. So both of those options are available. And it could be that on one case you want to package it. On the other next case, you want us to give the advice. We've no problem. We're not stuck in one situation or one way of actually processing business. A little bit why we're different. I mentioned that we're no different really to any of the others out there. We do have some exclusive products. We've got a couple of exclusives from Castle Trust at the moment, which I'm not allowed to tell you the full detail, but believe me, if you have anything at the moment you're looking to place with Castle Trust, place it with us, because we have stuff that others don't, but it's not available for much longer. But when that goes, we'll probably have something else to replace it. So it's not the products we offer. We offer exactly the same from everyone in the marketplace. It's the people we employ. Minimum 5 years specialist financial service experience. And I don't just mean 5 years experience working behind the counter at Nationwide. I mean working within our market, which is the specialist market. Hence the name of the company, Specialist Financial Services Limited Trade and Specialist Hub. It's what we do. It's specialist business. We could do the easy stuff because it's easy, but we can also do the very, very technical and difficult stuff because my staff have got the experience to do so. Staff that are multilingual. I'm not going to try and pronounce these. I always get the pronunciation wrong, but this is absolutely invaluable. As many of our clients, not many, but some of our clients have issues with where English might not be their main language, and trying to get across to them sometimes that obviously explain to them the different terms of the advance they're looking to do. Or on the other hand, just find out, we did find one a few months ago where the broker partner, who's no longer a broker partner of ours, had charged a client £5,000 upfront in cash for a regulated product. He's no longer able to give us business and has been reported because that shouldn't be happening. But he was banking on the fact that no one would find out because the client spoke hardly any English at all. So that's when it's very, very useful, but also just very useful speaking to clients in those different languages. And also mature with life experience, which is probably the most important one, because you do not want to be dealing with people on the end of the telephone who have only been in the business for either a couple of years or have got no life experience whatsoever. All of my staff, my youngest member of staff, I believe, is 35, going all the way up to, I'm the oldest now, I'm 58, but I think my oldest employee is 46. And that's the way I like to keep it, because I know that they can actually get on with the job and do the job without asking me questions every 15 seconds because they haven't got that life experience. So you're speaking to people that don't talk in text speak is probably the best way I can describe it, is that they can actually have a conversation with you, and knowledge-wise, they will be your equal. A little bit of feedback given by an introducer partner. This was last year, but he's actually told me this again about 3 or 4 times since. Every member of your staff I speak to is incredibly knowledgeable, polite, and looks to find the best deal for my client. You can tell they've been working on industry for a long time. They really know their stuff. Every client I passed over to your company has raved about them. Now, this is a guy with 40 years experience in the industry who's now semi-retired, was using others prior to using us, and now is like singing our name from the rooftops because he says the service we give is wonderful. I can actually have a conversation with my staff, which is absolutely vital sometimes. Just while this slide's taking about 10 minutes, just allow me to take a quick sip. So why are we different? It's our lender relationships is the first one. I've grown up in the industry alongside some people who started off as BDMs or underwriters and are now CEOs of the companies that they're working for. So my relationships with them are one of many years of friendship. As CEO of one large bridging lender who came to my wedding in 1993 and has been a friend since the late 80s. And if I need any help on a case that's with that particular lender, I don't speak to the underwriter. I just give him a call because it's ultimately his decision anyway. So I'd rather speak to him one-to-one and tell him warts and all about the case rather than an underwriter who's not really keen on the deal going to say, I don't really want to do this, which immediately puts it in a negative light. So our lender relationship is absolutely key, and I'll come on to that in a little while as well on how that can actually make such a difference. It's how seriously we take compliance, incredibly seriously, as you can see from the first two slides that I showed you, and how seriously we take the prevention of financial crime. We don't get a lot, although for some reason in lockdown there was an increase. We did catch 3 who were trying to commit mortgage fraud, reported all of them to action fraud, and on all 3 occasions action fraud came back and said they would not pursue. So it was a bit of a waste of time, but I did what I had to do. Can't really take any further. And the police normally don't like to take these any further because when it goes to court, the courts just basically give them a suspended sentence, and they just then start doing exactly the same again under another name. And the last point there, it's not our numerous awards from the financial press. Now, I have never won an award from the financial press purely because I've never allowed myself to be put up for one. Because you would see some of the speakers today have said about winning awards, which for lenders, absolutely fine. I can vote for any lender that we deal with, and we deal with well over, I think it's close on 200 now, probably even more. If a lender's given a particularly great service, I will, no problem with actually voting for that lender in the awards. But how can anyone vote for a broker? Quite simply, this is how it works within the brokers. So when you see a broker saying, we've won 79 awards in the last 12 years, well, that's probably because your staff have been on Facebook and have actually been saying to all their friends, vote for us, and you could win a £250 Amazon voucher. And that's how it works in the broker market. If it doesn't work that way, it normally works because there is quite often not quite a brown envelope of cash, but almost the equivalent in that buy 20 grand's worth of advertising and you'll win the next award for best broker. That's how bad it is. So please take the awards with a pinch of salt as far as brokers are concerned. I've only ever seen one broker win an award where I thought actually that was justified for what they did. And it's got so competitive amongst some of the companies that are winning these awards out there that I've seen grown men crying out in the awards do because they didn't win best bridging lender. That's how pathetic it is. The guy's got an ego the size of Luxembourg, but it really is quite pathetic. So if you ever see me at an awards do, unless it's a lifetime achievement award for being in this industry for so long, I'm quite happy for you to run on stage and punch me. Okay, just so you have my guarantee I will not fight back. I'll have Gaynor with me and she'll fend you off. So what else can we offer? Designated underwriters from start to finish. Now, we've tried every way possible of working with, which is the best way. And by far the best way is that when you pick up the phone and you speak with a member of staff about a case, that person takes that case through from start to finish. So not a sales department, not an underwriting department, not a processing department, and then not onto a completions department. The only time you would deal with somebody differently, unless they have some holiday, which I unfortunately have to let my staff have, will be me right at the end when we contact you and I say, please give me your bank details because I need to pay you, because we pay your commission on the day of completion every single time without fail, as long as I have your bank details, of course, because without your bank details, I can't pay you on the day of loan completion. In 3 occasions in the last 4 years, on the day I renewed my wedding vows, I paid the broker commission after I'd actually just finished renewing my wedding vows and popped off to the toilet. I was actually on my phone paying the broker. Didn't tell my wife. She found out afterwards. My daughter's wedding in 2019, in between her saying I do and me doing my speech, I paid a broker. I went back to the room of the hotel we were staying at and I paid the broker. And last year I had an operation on my shoulder, and on the day of the operation got notification we'd had the deal complete. So when I was actually recovered, and this was about 9 o'clock in the evening, unfortunately, when I was actually able to, because I was told I wasn't allowed to use any machinery or enter into any contracts whilst under this, because I was completely out of it, I still paid the broker. Because we don't have a cash flow problem, and I would not want to pass one on to you. So we sometimes don't get paid for a month, but I want to make sure you get paid on the day of completion, mainly because I'm lazy and I don't want to pick a file up twice. So as long as you've got your bank details, we will pay you on the day of completion, and no commission clawbacks unless the deal turns out to be fraud or If the client cancels the contract within normally 14 days, which some lenders still allow clients to do, in which case we'd have to claw back. But after a while, then that's something we take on the chin. It's now telling me my internet connection is unstable, which isn't good. If it's going to go wrong today, it's going to go wrong, isn't it? So what else can we get? What can we offer? This is an absolute vital thing, because within the second charge, lenders are lazy. There's no better word for it. So for all the years that I've been in second charges, we've been allowed to do basically all the processing, including the credit searches. So we have accounts in the names of our lenders that we can then access and do a credit search with the client's authority. Of course, we're not going to do a search on somebody without authority. With the client's authority, and we do a soft credit search right at the outset, because you know how frustrating it is when you get a week down the line with a customer who's told you, no, I've never had any credit problems, and you've then spent a load of time placing with a lender only to find out. And the worst one I saw was a few years back, which was a guy who had a CCJ for £12.5 million that he said he didn't have any adverse credit, and it was 3 months previously. You think he probably would have known the CCJ for £12.5 million. It's not like a parking fine that might have been sent to the wrong address. He knew about this, but we've all had those. It's part of what we do. We're able to weed these out right at the start because we get a credit search done. It costs us £3. I'd rather spend £3 than spend £100 in staff costs finding out then that the client lied. And it means that we're going down the right road right from the outset. A little bit what else we can offer now. This is actually really important, because we all use sourcing systems. If we're in mortgages, we all use one of the normal three, the mortgage brains, the 27 techs, or the tri-golds, or whatever they're called these days, which is fine for mortgages. Absolutely fine for mortgages. There's still some major problems. We still see products not coming up when they should do, but that's part and parcel of what we do. But there was very little, excuse me, very little within the second charge side. In 2016, when second charges became regulated, we checked the sourcing systems and was appalled by what we saw. And it really hasn't got much better. One broker now dominates 2 of the sourcing systems, and the third one has put it out to everybody, but is missing a load of products. So we developed our own, which quite simply we've called Loan Quote. We don't put it out to the broker market purely because we're not a sourcing system. But quite simply, it means that you can phone one of my staff, and within probably 45 seconds, they will have a list of products that are available to you, subject to a more detailed affordability assessment, of course. But it covers the basics. It covers the equity, and it tells us what's available. It tells us the best 5-year fixed rates, 2-year fixed rates, 10-year fixed rates, variable, whatever it is you're looking for. That was so successful that we launched Commercial Quote. Now, what this does is all the lenders that you never see on the sourcing, the normal sourcing systems, the tri-golds, 27 techs, etc., those lenders appear. So if, for example, you wanted to do a search among the specialists throughout the specialist market, and you were looking for, I don't think Castle Trust, for example, are on any of the sourcing systems at the moment. Forgive me if I'm wrong. We can compare them against Yorkshire Building Society and about 25 others. And again, these are all kept, and I've just stressed, these are kept up to date on a daily basis. We're not waiting 10 days to update these. These are updated by underwriters on a daily basis, because we've got a very simple system in place. And then we finally launched Bridge Quote, because the bridging market, really, there is some of the sourcing systems do not realise there's different ways of charging interest on bridging loans, which is very, very scary. So you're really relying on incorrect information. So we came up with Bridge Quote, which does know how these different lenders work, because again, it's been written with my involvement and underwriter involvement, and it just means that we will have an accurate quote, 45 seconds, what's available. We can have a quote with you on a PDF so that you can show your client. Data security, as you saw on the first slide, we are probably the top broker in the country for data security at this moment in time, I'm told. Full training if you need it, virtual or face-to-face. I won't do face-to-face. It involves going more than about 50 miles, obviously. So if you're in Newcastle, don't ask me to come up for a face-to-face training. Totally free of charge if you do require for your team lead any training. Our second charge panel, as you can see there, I'll just take a sip whilst that's up, but it's everybody in the marketplace. Because I've been involved in second charges for so long, I believe I'm now the second longest serving person within the second charge market, which frightens the life out of me. I still think I'm 25 in my head, but obviously not. But we deal with everybody. quite simply. And all of these are on our sourcing system. So as you can imagine, if you look at some of the other sourcing systems that are out there, they don't include every lender. Well, ours does, and it's accurate. Our packaged regulated first charge panel, this has actually had a change yesterday in that we've been added to the panel for foundation home loans. We've been on with Precise now for many, many years, Family Building Society. So if you have any of those, because one thing we do not charge on our package cases for a number of lenders, which you'll see in the next slide on the buy-to-let side, but for Foundation, Together and Precise, we do not charge any packaging fees. So we pay you your share of the prop fee, which is listed on our, and this will come up in a slide in a moment, but then which gets paid in the day of completion. We don't charge any packaging fees. So if it doesn't go ahead, it doesn't go ahead. Because we quite often find that packaging fees turn customers off, and you could lose a client just because someone's asking you for a package fee. I've seen some packages are charging for £399. That's extortionate for the work they have to do. Absolutely extortionate. Our specialist buy-to-let panel, where we give the advice, pretty much everyone. There's loads more that we give the advice to, but this is just purely from if it's from a broker partner, not if it's direct. For direct, we've got the BM Solutions, we've got the TMWs, etc. But if it's from a broker partner, this is our panel where we give the advice. And if it is where you want to give the advice, as you can see, we're now up to 16 lenders that we can package on your behalf. So no customer contact, you get paid in the day of loan completion. And I'm hoping the next slide will show these. So we're now up to 2, 4, 6, 7. So we're now, 8 lenders, now including Foundation. As I mentioned before, 0% or 0 packaging fees. We don't charge anything at all. Nothing up front, nothing on completion for those 8 lenders. And just a comparison, just to see exactly what's out there. This was taken, I should probably put a date on this, but this was at the beginning of the year. We had a look to see what was on. This was from Mortgage Brain. And we did check the others as well. As you can see, everyone was China's 3MC was kicking at 95. I don't know who TMTC is, but £199, TFC £199, TBMC £299. Just to me, I don't see. I can see why, because it's a very good profit center for those clients that don't go through. But to me, it's not right. It really isn't. Our bridging panel advised on either an advised or non-advised basis, whether it's regulated or non-regulated. We have got more than that, but as you imagine, you don't want to be looking at like 3 or 4 slides of different lenders. These are the main lenders that we use. We have a tier 1 panel, tier 2 panel, which we only go to tier 2 if tier 1 cannot assist. And we regularly check to make sure that lenders can be on this particular, can actually be a tier 1 lender with us by making sure their service standards are where they should be. And if they're not, then they get taken off. Simple as that. Our commercial panel, pretty much everything from the high street to the building societies, down to some lenders there you probably never would have heard of. We deal, again, with the vast majority. There's also some private banks that we don't regularly publicise, because that's where we have something an advantage over many of the brokers out there or our competitors, in that we have access to some products that others might not even know that that particular private bank exists. So, but that's where the main part of our business goes. If you want to advise on second charges, I mentioned second charges in my first presentation, that how many remortgages are now having problems with affordability. What is quite simply is this: access to every lender in the marketplace. We do the sourcing for you, so we help you with the sourcing. We give you we tell you what's available. We help with your file compliance. So even if you are doing a remortgage and you want to see what's available on the second charge side, because you are classing yourself as independent, or stating you're independent, you do need to be quoting you've looked at the second charge market. We can actually help you to put stuff in your file. We instruct the surveys and issue consent requests on your behalf, so you don't have to do any of that particular part of it. Package the case, check all the documentation, income paid in the day of loan completion, and again, no loss of control, but no package of fees. Can't stress that enough. So on our second charges, if you give the advice, we do not charge package of fees. And we now have, this is available. If you wish for me to send this to you, I can do so. Just put your name in the notes. I can send you our product commission and prop fee guide, which I just need to have foundation to it, because I must admit, I only realised last night I hadn't done it. So I'll probably do that before I send it. So just leave your name in the box, and I will send that over to you by email probably later on this afternoon. But that lists the lenders, the main lenders that we have on panel. Of course, we deal with a load of lenders that that would not appear in there, but they're just normal special arrangements that we have. So I'm more than happy to send that over to you, and you can see exactly what, and then compare it to what you're getting elsewhere. I think you'll probably be pleasantly surprised with against some of our competitors. And beware of the bandits. Just make sure that if you are giving a case to a broker partner, but if they want to call themselves master broker, they can do. This was a delegate who brought a case with him to a roadshow we did in 2018, a 1.4 million portfolio application, and it could only go at that time. The only lender that would assist because of the circumstances of the client was Interbay Commercial. He became he's still our broker partner, even to this day. Was promised £7,000 or 0.5% because Interbay do not pay commission. Now, he didn't know any different. He doesn't know what Interbay pay. He wouldn't have a clue. Interbay pay 1.5%, standard, as a standard figure. And the master broker, he liked to call himself, was earning 45.5 grand out of the deal. And that was after he dropped his fee from 30,000 to 24.5 as his final offer. So we took the deal on. We wrote the deal with no fees whatsoever, and both us and our new broker partner, whatever 50% of 1.4 million, it was over 10 grand. I can't remember the exact figure, and it sell through, no problem. So just check what actually the earnings are, because I guarantee there's still master brokers out there who will rip you off, and really they shouldn't be in the business. They only have to do one case to my 5, but it's wrong the way they do it. A couple of case studies now. This was one we completed last year. I do need to update these with some from this year, but this was a great example. This guy came to us during lockdown, and another broker as well. We took a full fact find and realised exactly what his circumstances were. He's also the other broker he went to is trying to place the case with Landbay. As you can see from the rental coverage calculation there, Landbay weren't going to do it. So we went to Octane Capital right at the outset. So he started off by saying, no, I'm going to go with the other company because they can do it cheaper. 3 months later, he came to us saying they didn't come up with the goods. They lied to me. And he said they can offer me Octane and they'll give me cash back. That's how desperate they were. He said, but I'm not going to go with them because they lied to me. So we did the case. 3.25 million with Octane Capital. This was last June, I believe. And our introducer partner earned 32.5 grand from the advance, spread over 2 days because we can only pay 20 grand a day. But he was absolutely over the moon, as you can imagine, because this was a case that he couldn't place. He didn't have the contacts with, he didn't even know what Octane Capital were. But a great case. We had a very happy borrower. It enabled him to buy another flat within a block that he owned all the rest of the flats. So he then had a controlled freehold, which increased the value of what he had. So very, very happy client. Also installs and designs kitchens, and he's designing my kitchen at the moment for free, which I thought was very nice of him. Another case study, this was last year as well. 75-year-old expat lived in South America for more than 10 years, wanted funds for his retirement and also repay existing credit card debt. No other property in the UK. Now, normally this type of case would not go too far with lenders, but because of our contacts at Hampshire Trust Bank, we've been their biggest introducer since they launched in 2016. We got the deal agreed, acted as packager, introduced a partner, earned 4,309, just under 4,400 day of completion again. I think he might be here today, actually. He might be one of the delegates. Another case study approached 15th of June, just before the stamp duty deadline on the 30th of June last year. Multi-unit freehold block that would normally be inherited from his father and was being treated as a consumer buy-to-let for some reason by lenders. Every lender we went to required a full valuation, even though the loan to value was in the region of about 20%. So I just made a phone call to the director of one of the directors at Together and said, do you really need a valuation on this? I sent him half a dozen examples of other properties in the same street that had sold, and he let us do it on a home track valuation, a desktop valuation. And he got it through. We got it through 8 days to spare. Introducer was absolutely delighted. The client was going to be getting a massive tax bill if this didn't go through. So it had to be done in the timescales as well. So we ticked every box as far as the client was concerned. Another happy client, another happy broker partner. And this was one we did November 2021. This was an unusual case in that when the valuation was done, it was found that the neighbour to the property had been stealing the electric from the owner of our security for years. Wouldn't believe what we see sometimes. So that was the major issue. There was other issues as well. It was a 20-bed property. It had permission for a 10-bed HMO. Some of the rooms were too small to be used as an HMO, but were still being used by the existing owner. So we arranged a bridge for 2.15 million, introduced rent £21,050 on the day of completion, because I paid him the £1,050 the day before, and asset itself, and we're now doing the exit as well, because our broker partner was so pleased with the way it went, and so was the client. And the client is now wants us to do other stuff through his advisor, his broker partner, who's our broker partner. So the ongoing business we're getting from that is tremendous. And this is my final one. It's not what you know, it's who you know. Husband and wife business, 2 very profitable children's nurseries. I won't say where they are, because you could probably Google it. Mr. Run the financial side defrauded HMRC out of 850 grand because he hadn't paid any of the tax and national insurance for many, many, many years. Don't know how he got away with it. The only reason he was caught was because one of his employees made an inquiry to HMRC about their potential pension, to be told, well, you haven't made any national insurance contributions for 15 years. And that's when it started. They divorced, but all the assets that had Mr's name on were subject to a Proceeds of Crime Act charge. And that included both the children's nurseries, their matrimonial home, and 2 buy-to-lets. Now, on this one, our broker partner had been to a number of different companies before us, and he'd not used us before, and declined by lenders across the industry due to reputational risk because of this Proceeds of Crime Act charge. So we approached together, and it was declined. Underwriters got the case. He's taken it to compliance department, who've decided to show how big and how powerful they were by saying, no, we're not touching that. So declined by compliance department. Given to me to sign off as a decline. And I said, well, absolutely not having that at all, because there is a deal to be done here. So I phoned, again, the same director, together, and gave him details of the case, warts and all. It was a low LTV, 50% LTV for a business that had 300 grand cash within it. And he went to compliance department and said, why aren't we doing this deal? And they couldn't actually give a justification of why they turned it down, other than the fact that they had power over the underwriter. There was absolutely no justification whatsoever. We did that, got it agreed, got it through, paid off the Proceeds of Crime Act charges. Client kept her business, kept her home, introduced her in just under 12 grand on the day of completion. And since then, she's now bought more buy-to-lets in her name, has come through a broker partner, and guess what? We're getting more and more business out of it. So what he's done is, this is basically the little bit about what he said. Just basically, he said that to the service you and your team provided and continue to provide is second to none and well beating. Thank you. So can't really ask for much more on that. So if there are any cases you cannot place, or you're fed up with your current packager that you may be using, leave your name in the type your message box below with type of inquiry, or complete a decision in principle form that will be sent to you this afternoon. We have one for every product. Go to our website and you can submit all cases online, or alternatively, just pick up the phone and give us a call. My staff are ready to take your call. Who to contact? You've got Kate and Kirsty on the regulated side, the 2 heads of department who've got between them. Kirsty, for example, has been with me since 1997 and has probably seen every type, and she's done thousands upon thousands upon thousands of second charge loans and first charge mortgages. So she's got the experience, and that's the sort of person you're going to be dealing with when you pick up the phone to my staff. And Kate's been in the industry since, I think it was 2005 she started. So that's who you're dealing with. So that's the 2 contacts there. Telephone numbers are at the bottom. If it's on the unregulated side, 3 heads of department, Joe, Haley and Sakina. You can probably guess which one speaks the different languages out of those 3. Pick up the phone, speak to them, and they will be able to assist in anything you have, if you quotes, anything you need, they will be able to assist. You would have had a request. If I'm not already with you on LinkedIn, or linked on LinkedIn, I think it's called, then you will be getting a request from me, unless if you've got a common name, I might not be able to find you. So if your name's John Smith, I'm never going to find you. So, but there's not too many Tony Suttons on there. So please, I'm more happy to link with you on LinkedIn if you send me a request. And if you like what you've seen today, when you're sent the information in the post this afternoon, you will receive, in the moment you see it'll be a broker pack, you'll also receive one of these. We need one of these back before we can pay you commission. That's the only thing that could actually delay me paying you commission. Were two things. One is I don't have your bank details. The second is I don't have one of these. So we must have a signed agency agreement, but we don't need one to actually accept business from you. But I do need one to actually pay you. Next show, 5th of May 2022. I've taken this is a screenshot from our website. So you see we've got Octane, Pepper Money on the second charge side, Precise Mortgages, and Hampshire Trust Bank, covering, as we always do, different products. So you're not listening to 4 speakers all talking about bridging and why they're the best bridging lender in the world. It's 4 different products, give you a spread of the specialist market. And future ones, you can sign up for as many shows as you want, always have different speakers. We've got another 6 after next month, so 7 left for the rest of the year up to November. If we have the demand, we might start doing 2. And we're also probably going to look to do some podcasts with just like a one-on-one with a lender as well. So keep an eye out for that on your email. Feedback and CPD. So when you leave today's session, you'll see in the top right corner, it will say event board, and we'll probably have your initials. If you click on that and then click the exit event box, that will then send you your feedback form. Complete your feedback form, reply to that, and then your CPD certificate will be emailed shortly after. If you don't get your CPD certificate, then probably leave it till tomorrow. Send me an email or the team an email, and they will get it to you manually. As obviously these are free, what we do today is the free for delegates, also free to lenders as well. So all the costs involved in setting these up. So if you like what you've seen today, please just go onto Google and just search Google Review Specialist Hub and Trustpilot Specialist Hub. Leave us a review, be greatly appreciated. Don't go to Specialists Hub, which is a company in the training side who cease trading but still have those actually up and running. So don't leave it on the wrong one. But I'll be very grateful in your reviews you give. Enjoy the rest of your day. Until next month, stay safe and prosperous. I'm only going to have a lie down because this has been probably the most difficult show we've ever done. But thank you so much for attending today. Really, really appreciate it. Thank you.